Epstein with your metal market wrap-up, and this wrap-up is for the evening of Monday, the 8th of July, 2024. Can't believe how time is flying by, and it's 6:30 p.m. Central Time. Before I get too far with anything, we have the 4th of July sale ending today, Monday, July 8th, Chicago time, 11:59 p.m. Central Time. So you've got just a few hours left if you want to take advantage. 35% off any course or 1 year of research. All you need to do is go to irepstein.com. You'll see courses and research on the top. Choose which one you want. You'll see the retail price. Once you go to buy it and put it into your cart, so to speak, the discounted price will show. You can move your cursor up here at any point too, and it'll take you right to the area that you need in the sense that'll take you to the website. All right, and I think you'll learn a lot, and that's the whole goal of this. It's not about me saying buy here, sell there. It's about me showing you why to buy there, sell there, what I'm thinking, and it doesn't mean I'll be right, okay? I don't walk on water. I do my best, and I'm pretty satisfied with it compared to what's out there. We have a lot of data tomorrow, but I don't think it's the major league stuff. Redbook Group coming out with the U.S. retail sales at 755. You might think, why do I not think Fed Chair Powell's testimony to Congress? He's got a 2-day testimony, semi-annual, kicks off at 9 o'clock with the Senate, then on Wednesday, the House of Representatives. I just think he's going to say the same things he's been saying. I think they'll say that he personally is getting encouraged, that he's seeing labor, the demand is much more in balance. I think he'll say that inflation is sticky but slowing down the way that they want to see. I don't think he's going to say, yeah, come July, we're going to make a rate cut. That isn't going to happen. He wants to see more data. That's the theme I think he'll drive home. API released their member stockpiles at 3:30. The EIA is going to release their short-term energy outlook report, and that'll come out at tomorrow about 3:30 also. And the Federal Reserve U.S. consumer headline recap came out today at 2 p.m. Central Time. They were expecting the market at $8 billion. It had been about 6.4 in the month of April. It went up dramatically. It actually did about double from the April report. That's a lot more debt that the market has taken on. And I think that that's a shocker to the market. So does that mean the consumer is out of cash and he has to just load up on debt? I don't know, but it's things we have to think about. All right. Let's go for, if we can, to the charts and let the charts do the walking for us. I keep hitting the wrong buttons here. I'll get it right now. There we go. All right. First, Hurricane Beryl made landfall, Category 1 in the United States. You know it was a Category 5. It dropped a heck of a lot of rain. And when we look at what's happened in the grain prices, you're going to see that they fell very hard today. And that's because over the weekend, we had the right type of growing weather, a good amount of moisture, not soaking in the terms of washing the crops out, and areas that were dry got rain. The numbers went up as to how the crops are doing, and they're ahead of themselves in many areas, especially corn. We have a mixed bag going on in the currency market. We know that at the end of the month, we have the Japanese bank coming out, the Bank of Japan, and are they going to raise rates or not? They're getting the first good news, if you will, that the wage hikes that kicked in, I think that it was in May, they're starting to see the first impact, but it's not the full impact they want to see. They may wait another month, I don't know. In the gold and silver market, well, they were down hard today, and they're recovering is the right way to say it. The copper got pulled down. They had to go down real hard to even get copper by midday to start breaking down in price. But why not go there and take a look, because I can cover the stock indices when we get to the financial report. In the gold, as long as you stay over the 18-day average, I have a favorable attitude towards it. So if you were to ask me from here, if the market broke down there, would the pros buy it? I would think so. When you look at what the market's done, this is pretty important. If you go back and you look at the month of June, and here's the delineation point right on the chart. The market for the month of June early on set its high and low and traded within it just about the whole time. It recently came up, challenged that high, and the market's getting thrown back a bit. But when you go to the swing line, you have higher lows and higher highs. Now remember what a swing line is. I connect the current plot, the current bar, to either the high or the low based on a series of events. And I teach them in my full charting course so you can see it. I created the indicator to do that so I can just look at a chart and say, hey, the trend is up. As long as the market doesn't get back under that low, that's the risk. If I were to buy there, just in terms of the swing line trend, that's where my stop would be. It has nothing to do with profit objectives. Got it? I filter it by looking at the 18-day average of closes and saying, okay, if the market were to break one of the numbers, there's two numbers that I teach that you can enter at. One of the numbers, and I don't show the other one here, is the 18-day average of closes at 23.4630 with the stop under that low. Okay, why would the stop be there? Because you break the pattern of higher lows, higher highs. Then I don't know what we have. Where should the market have stopped on the current rally? By the Bollinger Band. Why? Because 95% of the time, a market will stop at that number, especially if you're not embedded. An embedded occurs, and you haven't had one in a while. I'm looking here. Yeah, when the red and the blue lines get over 80, it's often accompanied by a market that wants to go higher. Got it? When it loses the reading, you get a short-term pullback, often towards the 18-day average, a challenge of it, and then it tries to move up, it re-embeds, and that's just what happened in those circumstances. Eventually, this is going to be a very important area. The longer this market churns in here sideways, well, until it breaks through everything, I say it's bullish action, looking to see where the market can go from there. When I look at the gold-silver ratio, the fact that you're dropping under the 18-day average of closes on this means you need less ounces of silver. Each of these numbers is how many ounces of silver in a perfect world can I put into my shopping cart, go down to my coin dealer and say, Joe, you know me a long time. You're not going to charge me a commission, are you? No, of course not. I'm going to go with spot prices. So I'll give you right now, if you give me 76.1 ounces of silver, I'm going to give you an ounce of gold. That's your ratio. When I look at the silver, certainly a bullish chart, overbought in the market. Interesting part to it, supports all the way back here at the 30.08 level. Let's round it to that. All right, that's pretty far from here. That's over $1 break in the market from, let's see, 31.12. Yeah, that's about $1 break from where you're at right now. The copper didn't surprise me to pull back from getting itself way up. This market is gone crazy. It's gone from roughly 430 up to 469 in one swoop in the market. I mean, it just went kaboom. You know, I know and I believe I was way too soon back here in copper, but I don't think I'm wrong in the supply-demand factors long term. But this proved to me that you came out of this downtrend. This was everybody getting this wrong, right through here, me included. Right down there, then it came back over this and that negated the downtrend. So now I can see a churn, but I think we're through the worst of this break. And notice where the market stopped. I mean, it's textbook what I teach in my course. First challenge of a 100-day average in a Bollinger Band. You lose the bearish reading of the embedded and you took off to the upside. I mean, everything was there. Platinum, I was looking for a failure at the first challenge of the Bollinger Band and I'm getting it. Do we have a trend? You don't. You have a higher high and a lower low. And in the dollar, you're in a downtrend right now. You are oversold. The market's going to be, as we both know, listening to what Fed Chair Powell says tomorrow and on Wednesday. And then all attention's got to turn to Thursday's CPI and Friday's PPI. You want to get them steady to lower so that if you're counting on an interest rate cut, you have the month of June in your book. Then you have labor weakened, CPI didn't get higher, and PPI. If those numbers move to the upside, be careful because then the month of June isn't in the book, so to speak, all right? It's not behind us. So I think it's important. There's one other thing that's going to be important coming up. We start the earnings season on Friday. So this market has been on fire, especially the NASDAQ and the S&P. Not so much, if you will, the Russell, and certainly not so much the Dow. The two of them have been the laggards. This market's going to demand that earnings and forward guidance carry these numbers. But remember, the weighting of the S&P and the NASDAQ still has a lot of AI in it, and you don't have that much in the, you certainly don't have a lot of it in the Russell, and you got even less of it in the Dow Jones. Got it? So it's a tale of two cities. You got to pay attention to it. And the one thing I don't want you to forget is the sales right now, iraepstein.com. You can either click here or go there. You've got roughly, for when I'm doing this, about 5 hours, 5.5 hours left, and that's it. I'm Ira. You take care.